What's up everybody, Dan here. So welcome to the channel and Happy New Year's. 2020 is over, and in this video I want to talk about my trading strategies for 2021. So let's get into the numbers. So if you're new to the channel, go ahead and give me a thumbs up and subscribe. It would really mean a lot, and I'll be making more investment videos in the future, so keep on the lookout. At the start of 2020, I had an E-Trade account for my just taxable brokerage account, and I had an investment property. So in August of 2020, I sold my house. The prices were just going crazy and the inventory was super low, so it was a perfect selling opportunity. And I also too opened up a Ameritrade account, and I started a Roth IRA. I started a Fidelity account, and that's for my 401k retirement account. So I started a new job, and so this is what my new account is. And then I also opened up a Robinhood and WeBull brokerage taxable accounts. The Robinhood and WeBull accounts are just good accounts to have in case you wanted to sign your friends up for free. You both get some free stocks, and you can, I think of it as just play money, just nothing really serious, because their interfaces aren't very technical and they're just pretty basic. Let's start talking about my strategies for 2021. Starting the year, my 401k is approximately $42,000. My goal for 2021 is to maximize the 401k, and so I will be contributing the max amount, which for me is $19,500, and so that'll come out to about $1,625 per month that'll be going to my 401k. Let's take a look at how my fund performed last year. When I was taking a look at my company's 401k, I originally was invested in these target date funds, but when I did some research, I found that these target date funds had you pay more in the expense ratios and more for management fees, when instead you can just invest in the index funds. And turns out the target date funds typically just invest in the index funds anyways, so I cut out the middleman. So you can see here that I don't have any target date funds, and what ended up happening was there was no 1-year return because I ended up selling and buying the new funds. Of this data that I have here, there was about a 10% return. I know that it was a little bit more, probably more towards the 12 to 15% return for my 401k. And then I ended up starting a new job, and I have a new 401k fund. Okay, so let's take a look at my new 401k fund. One thing that I want to point out is if you are less than 40, which I currently am, I'm 34 years old. So what I've read is that it makes sense to really be aggressive. I am at a good young age and I can afford to be aggressive because time is on my side currently. So I am focused mainly in equities. So I have very small amounts of bonds, but right now there is a large blend of large cap, mid caps, and small caps in international stocks. As you can see here, the majority of these, if you look at the 10-year fund, are up over 10%, which is basically the average. So there's only a few here that are on the lower side, but the majority are over 10%. So I am basically confident that these funds will go up at least 10% in 10 years if I were to invest in them today. Alright, so then the next thing is I'm going to be investing into my Roth IRA. I'm going to be maxing that out this year, so that'll be my max contribution that I can have for 2021 is $6,000, and so that's going to be approximately $500 a month. I'm going to do a video later on the differences between traditional IRAs and Roth IRAs, but so right now I have TD Ameritrade as my main Roth IRA, and then I have an IRA in the American Century Investments. I learned just by looking at the expense ratios that American Century Investments is in a mutual fund right now at a high expense ratio, so I plan on selling that mutual fund and I'm going to be loading up on some ETFs. I'm going to be doing a video later on expense ratios, and I will show you that wow, it really does make a difference when you look at the numbers long term, what it means to have a high expense ratio versus what it means to have a lower expense ratio, and the effects that it has on your money. It is very drastic, so be on the lookout for that in the future. So some of my long-term investment plans this year are, as you know if you follow any of my videos, that I am very bullish on Tesla and I am very bullish on ARK. ARK. So even though ARK has a medium to high expense ratio, if you look at how it's performed over the past 5 years, their performance is in the 30s to 40s%. Currently right now, the S&P 500 averages about 9.8 to 10% on an average over the long term. And so right now, currently ARK is doing very well compared to the S&P 500. And again, I have personally made the plan to sacrifice a little bit of the expense ratio in order to capitalize on the gains that ARK is providing. I see ARK really being strong in the future, and feel free to watch the video that I made about ARK investments, and I plan to do more videos on these ETFs. So I'm gonna eventually get to the point where my brokerage accounts and my Roth IRAs get to a point where they're very large and I don't want to take any risks. I just want to put them into some funds where I know they will grow money over time and I don't have to think about them. It's something that has a low expense ratio, so I don't have to think about too much expenses when it comes time to start collecting from these funds, because I eventually want to retire in the mid-age of 60s. I don't want to be working past 60s, so this is something that I want to be able to just set it and forget it. So these are the list of funds that I've picked out and that have had the lowest expense ratios and have done best on the returns. The one that stands out is Hale. So this is an account that Spider just recently created this past year. I like them because they are investing in long-term infrastructure for EV cars. So, and you know, from my, at least what I've invested in, is that I see eventually EV cars becoming mainstream, and so this to me is like owning the gas stations for EV cars. So I see this fund growing tremendously, and even though it has a little bit higher expense ratio, I don't see that as too big of an issue. Also too, I see it balancing out because Berkshire Hathaway, Warren Buffett and team has consistently beat the S&P 500, and they have absolutely 0% expense ratio. So that is something that Warren Buffett does for us, and so I take advantage of that. So this is what I'm going to be investing in the very long term. Real quickly, so for my brokerage accounts for 2021, I plan on using my E-Trade as just for individual stocks and ETFs. So right now it's my catch-all account, so I plan to stop trading options on this account and just use it as trading just plain stocks and ETFs. I also will continue to invest in Robinhood. I am particularly watching Bitcoin. So as we all know, Bitcoin is just exploding. And so what I like about Robinhood, and actually WeBull as well, is that you can do partial shares. So I don't mind putting in a couple $100 here, a couple $100 there. It doesn't really matter in the long term. So this is something where I'm just going to have these small free accounts lying around. Currently, they don't charge any fees for them to have and maintain. I also like that Robinhood eventually is going to be coming out with their IPO, so I'm interested and will invest most likely in this IPO. One thing new in 2021 is I'm going to open an interactive brokers account. I really like their trading platform and I really like how it's structured for trading options. I think I will have a competitive advantage with using this account, so I will be doing more videos about this in the future, but I plan on funding this account with at least $10,000, and this will be my main account to trade options on. So this is one thing that I really want to highlight, and it is just incredible, and that is the effects of compound interest. So if I quit investing today, if I didn't touch my accounts for the rest of my life until I retired, then I could see the effects of compound interest. This is a calculator I used, and so I say I'm retiring at 60, so that's in 26 years. Currently I'm 34, and I said the interest rate is going to be 9%, and so I just used the S&P 500, which is 9.8 to 10%. I went 1% lower just to be on the conservative side. So if I didn't touch my accounts and I just let them be for the next 26 years at a 9% interest rate, my accounts would be worth over $2 million. And so this is the average that I've seen, which is 11.5. I think that's on the high side, which is why I did a 9% conservative rate. As you can see, this is just really satisfying to know that I can just walk away where I am now, don't touch a thing, and I'm feeling pretty confident for my retirement future. In 2021, my goals are listed here. So I plan on taking advantage of as many investment accounts as possible so that I can maximize my performance for the year. That includes maxing out my Roth IRA. Also too, that includes maxing out my 401ks. I also am going to be contributing to a Roth 401k, and I'm going to be making a video about that in the future of what the advantages and disadvantages of that are. But for now, I'll be splitting that in between, so I'll be contributing to both. And then I plan on contributing at least 10,000 more to my E-Trade account and at least 10,000 to that interactive brokers account, because I want to trade options, and my goal for that is to double that account, if not more. I plan on making a ton of money in that account. That is going to be my highest risk account, so I plan on having a lot of fun with it and sharing it with you guys. Also too, my goal for the year, and this all depends on how the market performs, but my goal is that my E-Trade account, my current brokerage account, is going to increase by 30%. Right now, it increased over 100% this year. I was very fortunate and had some really good investments in Tesla, so I plan on having that grow, for at least this year. So again, that all depends. I mean, if we have a down year, this is just going to go down the hill, so we'll see how that goes. And then also too, I plan on contributing to my flexible spending account. I have just started that with my new company this year, and so I plan on doing more videos about the advantages of flexible spending accounts versus health savings accounts. And then also too, I plan on trying to buy a rental property. So the market in my area is just insanely hot, as I'm sure wherever you guys are too. But the opportunity to have a rental income and have somebody pay for your mortgage is just too good to be true. I miss having my rentals, so that is in the cards for me to eventually get another rental income, because there is nothing like having your mortgage paid for and monthly income coming into you month after month from you having a house. So that is my plan for the year. So I'm not doing this to brag in any way. I'm doing this to inform. I plan on making a lot of videos in the future about 401ks, about Roth IRAs and regular IRAs, and about just starting up brokerage accounts, working with brokerage accounts, flexible spending accounts, just a lot of everyday things that we don't learn in school, which we should, because if I know for me, and the fact is that if I had started doing this investment and these kind of planning, 20 years ago, I would be in a totally different situation. So I think it really helpful to us to really learn how to maximize our benefits and how to maximize our money where we can. So that's my plan for the long term. And I'm curious to see too if anybody is going to be doing any challenges, if anybody's going to be starting some new brokerage accounts to see if they're going to try to beat some records. I'm really going to be aggressive this year in options, and I'm going to have a lot of fun. To me, I think it's going to be very helpful too, just to have a completely separate account and not have to think about other investments that I have. I think I'll be in a better state of mind when I'm doing these trades. So that's all I had for today, everybody. So thanks for watching. I really appreciate it. If you stuck around to the end, thanks a lot. And do me a favor and hit that subscribe button, hit that like button. That would do me a huge favor and really help the channel. So thanks for watching and good luck, happy trading, and let's make some money this year. All right, take care.